You all, we're here 10 at 10, and I'm joined today by Colin, where we're looking at a particularly contentious issue. Over the last couple of days, we've done some live streams dealing with issues that are coming into us, into KnowledgeHUB. Today, we're going to deal with a specific issue that comes up, not just in KnowledgeHUB, but it comes up everywhere. And I think is particularly relevant for all accountants to get really clear on this query, because it's directly related to where we are in coronavirus. It's directly related to issues that are happening right now, and it is going to be extremely relevant going forward in a post-corona world in terms of when we have clients with difficulties and when clients are moving and changing and winding up. This is a critical issue. This query that we're looking at today comes in various forms into our KnowledgeHUB team. Now, I'm going to lay out the query in a generic sense because we have so many variations of them. I had an accountant a couple of weeks ago who had a client who has now moved to another accountant. The other accountant did not seek professional clearance, and there was fees outstanding, and the accountant has returned all the books and records belonging to the client, but is refusing to hand over some of their work product on the basis that it is their work product. And the whole area of accountants seeking and obtaining professional clearance. We had a question about that. Well, what happens when I seek professional clearance, but the existing accountant won't give me professional clearance on the basis of fees being outstanding? The whole area of when a client moves to another accountant, and if there's a money laundering issue, are you obliged to let the incoming accountant know that there's a money laundering issue, or does that fall under tipping off? Then we have changes to the IESBA Code of Ethics. All of you who are members of recognized accountancy bodies are governed by this Code of Ethics now. There have been changes to the Code of Ethics. The whole concept that has been spoken about for years in terms of placing a lien over the books and records in relation to outstanding fees. And what is our query that we are dealing with today? The query that we are dealing with today is, what are the issues and challenges around changes in accountants for the incoming accountant, the outgoing accountant, and we are particularly going to touch on outstanding fees, which really appears to be topic of the month. Colin, can you just set this up a little bit and then bring us through the material? I know this is supposed to be a 10 and 10 column, that we're only supposed to be on here 10 minutes, but I have a sneaking suspicion that the material that you have, it's going to probably take us maybe to 15 minutes. So wherever you're watching us here, folks, if you're watching on YouTube, if you're watching in our Facebook groups, off Facebook, off LinkedIn, if you have any questions, do put them in the comment box below. Put them in the comment box below, and JR is going to feed them back in here to Colin and myself. So if we can answer your questions as we go through this, and we will, because I think, Colin, this is a critical issue and is invaluable and timely right now.
Yeah, thanks, Des. Yeah, look, I'll share my screen here now, and JR, can you allow me to share my screen? Oh, yeah, thanks, cheers. Share. Sorry about that. Hope you can see all that.
Yeah, no, we can see your screen now. We can see you're on slide share there.
Yeah, really, it's all about it's all about like changing in professional appointment, and really like there's so much involved in it. Now I'm gonna probably chop and change, because like a lot of stuff is basic stuff everyone kind of knows and we've kind of dealt with. So some of the more big ticket items like the AML stuff, I want to have a cover off, and the lien in the books and records. But to set this up, you're dead right. Like the IESBA code was brought in April 2018. At this stage now, all the institutes, I think I'm not sure about CPA, but definitely ACCA are big time piggybacking on this. Chartered have recently implemented it from, I think, March 2020. So the old code of ethics are gone completely now from Chartered, and they're basically, this is it. This is their code of ethics. But it makes life slightly easier for people, because like they know what to have a look at it. And so that's what they're basing all this on. So And then the changes in professional appointments are all covered in one nice section called section 320. So it covers off a couple of things. So it starts off there with the general client and engagement acceptance. You're required to assess the threats.
Okay. I'm not sure if you can see the chat there, because I know you can't see your own screen from where you're presenting. But could you hit presenter view or maybe resize your slides?
There we are.
Super.
So in terms of so it's basic basic stuff, threats, what kind of, before you take on a client, identify the threat. An interesting one basically is, a self-interest threat could be created if you and your team don't have the competencies to do the job. Which is an interesting thing about taking on a new client.
Well, one of the practical things, so Colm, I know you're talking about ethics. I'm probably going to focus on the practicalities as we go through this. One of the practical things in taking on a client is when the last accountant did this and the last accountant did that, and the last accountant couldn't do this and wouldn't do that. You have to assess, was the last accountant as bad as the client is really saying, or was the issue actually with the client? Now, there are accountants out there who don't have the same levels of standards of service, but we do have to understand there's two sides to every story. And although that's an ethical requirement and an ethical consideration, it's a very genuine consideration, because the last thing that you want to do right now, folks, as we're facing into a panpression, is to take on somebody else's problem. So by all means, take on and welcome new clients, but ethics and common sense commerciality, are they the client that you really want to take on?
Yeah, and exactly, and the standard says basically, look, there's potentially three areas where this will implement or it'll hit. It's either as you said, if you're taking on, if you're replacing another accountant, if you're tendering for work, and then if you're actually doing work, complementary or additional to another accountant. So it covers off a myriad of areas. Obviously, safeguards are there. Look, it's communicating with the existing or the predecessor accountant and obtaining information from the client directly. So that's kind of setting it all up, right? So when we're really getting into the nub of the thing here now is, whereas you've been asked to take over, so you need to communicate now. I know yourself and Mike covered off this really well earlier on in probably the week or the month. It's telling you shall at least seek to contact the existing predecessor accountant. So if you're not doing it, they'll pin you on this. They continue on this.
So professional clearance, Colm, just to be clear here, professional clearance is not optional. And the other thing is, this is the IESBA Code of Ethics. This isn't that you get professional clearance on audit and you don't on non-audit. But if you are taking over a client as an accountant, be it a audit exempt company, an unincorporated client, you have to seek professional clearance.
Yeah, and that's what it's saying. It says shall at least. So shall is shall. So it's telling you have to do it, and it does say there basically that is even if the accountant isn't in public practice. So it's an interesting thing. So the idea of like the part-time accountants or the guys operating out of their bedroom, they mightn't be in public practice, but like you should at least seek to contact them as well, in order to get your clearance.
The practical solution here, Colm, is you communicate with the predecessor accountant, you communicate with the predecessor accountant, and then you communicate with them by recorded delivery. In other words, certified post.
Yeah, exactly. Like
and you clarify for them that if they do not respond, that so this is a silence implies that no adverse comment was to be made. That you can't just wait indefinitely. You send registered post. And you tell them that they have a certain amount of time to respond. And if they do not respond within that time, well, then the incoming accountant just moves on with the job.
Yeah, exactly. And like, that's exactly it in terms of now, it doesn't, the point there basically is, if you're unable to communicate with the accountant, you take other reasonable steps. Like that's like talking to your proposed new client, getting the information, trying to get it back, probably registering for a revenue, CRO, all that kind of stuff. That's if you can. So yeah, so like that's fair. That's fairly easy. What is interesting is, and I want to probably just move on down to the AML, because I think the AML is kind of really important.
Yeah, you've done some digging on the AML requirements here, Colin, and you've dug deeper, and you've come up with some important points.
Yeah, and this is basically like, obviously this is coming from the code of ethics, right? It's also, it dovetails nicely with the CCABI guidance issued in May 19 for the AML guidance. And basically what it's saying basically is, obviously, AML considering you can be careful about, what you're asking and what you're seeking. But in both of them, it says the proposed accountant shouldn't ask the questions like, were there any reported suspicions or any STRs issued? Because that's putting the existing accountant in a kind of an untenable situation where
So the incoming accountant shouldn't ask the question about money laundering, suspicious transaction reporting, and the outgoing accountant, if asked, should they answer the question?
No, 100%. The guidance under the CCABI guidance, and I'll get the reference now, is I think 6.2 says, those requests in terms of client identification and any reports being made should be declined, and especially it should be declined in terms of professional clearance letters, and there should be a standard wording. It doesn't give the standard wording saying, look, we can't reply to this, obviously, and what the code of ethics are saying is unfair for the proposed accountant to ask the question, because any answer from the exiting accountant is going to be wrong in terms of, like, I can't answer it, or you're not answering because they're in a bad situation. And also the point in terms of know your client and client identification, you can all well and good ask that, but it's up to you as the proposed accountant or the new accountant to do your own AML checks. You can't delegate that. It says it in the guidance, and it says it in the CCA in the code of ethics. You can't delegate that to the old accountant. So you've got to do your own checks in terms of risk assessments and KYC. So that's a really important point to do. And the point here is basically you shall not disclose anything to the prospective accountant, because obviously if you do that, and maybe it could be a less than scrupulous accountant, that could be discussed with the client, and that's a form of tipping off. And then we're all going down a route that we don't want to go down, a route where a breach of the legislation regarding tipping off, and you don't want to do that.
Okay, so let's land the plane on this one here, Colin. Right. So you've shared the legislation, you've shared the guidance. If you're an inbound accountant, so you're taking on a new client, you cannot ask questions of the outgoing accountant in relation to money laundering, and you have to do your own due diligence. Yeah. So that's the responsibility of the incoming accountant. And the outgoing accountant, if you're asked about money laundering issues, you basically need to give a non-responsive answer that doesn't indicate either way.
Yeah, exactly. And I think like that puts that per accountant in an unenviable situation where any answer, even no matter how.
Yeah, but the thing is, Colin, from a money laundering perspective, I have somebody who's a suspicious transaction. From a tipping off perspective, if I've reported them, I'm going to want to get out. So I'm going to want to get out. I'm not going to want to tell them why I'm getting out. I'm probably going to cite fees, busyness, a whole lot of other things. But I do need to. I need to get out and then just keep my head down and move on. You don't want to continue working with somebody who you have suspicion of money laundering.
Yeah, very, very much so. Exactly. Yeah, and that's the problem, you see. In terms of like, you don't want to get out, but you don't want to tip off. And the guidance is there. It is there to kind of support it. So you're looking at the AML considerations in the Code of Ethics in section 320, and then you're looking at your CCABI. And like Mike has been banging on about this for a long time about money laundering. You need to have the CCABI guidance on your desk. That's your go-to document regarding AML, because it is really good, and it's the industry norm for accountants.
Okay, so we've talked about money laundering, we've talked about accepting the client, we've talked about seeking professional clearance and how to deal with professional clearance if the accountant doesn't respond. What comes next, Colin?
Well, like, it's obviously there's confidentiality issues there, and in terms of just watch out for, bear in mind your confidentiality situations, but you will be you're allowed to discuss the client with the proposed accountants. So just
I presume, Colin, from a practical perspective and from a GDPR perspective, that you need to get clearance from the client to hand over the information. And for many accountants, the handover of information is embedded in GDPR. So it's embedded in the GDPR policies and procedures, but obviously you need to get sign off and clarification to discuss and to transfer the information.
Yeah, and if you're an incoming accountant, actually, there's a section there. The comments in the Code of Ethics are basically if the existing accountant doesn't get the permission to disclose the information from the client to the new accountant, he has to let the new accountant know that fact, and then the new accountant needs to kind of say, well, look, does this smell? Is this fishy? As in,
so we're creating a circuitous situation. Incoming accountant requests the information. The client should tell the outgoing accountant, pass on the information.
Yeah.
If the outgoing accountant says, well, I'm not entitled to pass on the information, well, now the incoming accountant has to go to the client. But the very fact that this circuit has happened raises issues in terms of, well, should we accept this engagement or not?
Yeah, if you feel that like the client isn't given the accountant the old accountant the release to give the information, should you be taking on that client? That's the kind of well, why is there something smelly or whatever,
Okay, Colin, the big question: the client leaves, okay, and the transfer of information and outstanding fees. So I've got a lot on, and I'm hearing a lot of this. Where people are citing that during coronavirus times, when they take on new clients, that the transfer of information is much harder. Now, I suppose the practical advice to accountants is, well, you've got to serve the people who are paying you. You've got to serve the people who are going to be with you long term. So I think what some accountants are doing is, well, this client is gone, and they're long fingering the transfer of information. So first of all, just can you deal with that issue?
Yeah, again, the Code of Ethics there basically, look, and I've put there, the existing accountant shall deal promptly with any request for information and transfer records. So that's the first point. But this is the big point. But may have a right of particular lien if they're unpaid fees. It stops there.
So let's put that aside for a second, Colin. So the transfer of information needs to be done on a timely basis. If another accountant is not transferring the information on a prompt basis, the new accountant or the client could point out to them their obligations under the Code of Ethics.
100%. Yeah, that's exactly, and that's where you're going. I think it could be like this. This is where you're going with all these questions in terms of, okay, look, this is where you're pitting it. It's now a Code of Ethics issue. It's now, do you really want to go down the route basically of, okay, look, I'll make a complaint under the Code of Ethics because you're not doing.
So here's the unfortunate thing about complaints, folks. Outstanding fees, and we often defend accountants on the basis that when somebody makes a complaint to the institute, we say, look, this is purely a fee issue. This person just doesn't want to pay their fees, and they're trying to smear the accountant to get that. So the institutes do see through that. but it's a very thin line. It's a really, really thin line. You cannot withhold. Now, outstanding fees column. A client leaves me and owes me money. My understanding is that under the code of ethics, the incoming accountant should obviously encourage the client to discharge all outstanding liabilities.
Yeah, that's exactly it. Like, you know, like there's no problem with the outgoing accountant mentioning to the incoming accountant, look, there's fees outstanding. Like that's just good professionalism. Like, as in, look, lads, there's, and like, yeah, obviously if you're taking on a client, you kind of, well, okay, well, why you'd want to know, well, why are you being stiffed for your fees? Am I going to be at risk of being stiffed as well?
Well, you've just made a great point, Colin. Let's take off our technical hat here for a moment and let's put on our practical hat. Our practical hat, if there's outstanding fees to the previous accountant, what's going to be different about me? So this becomes, do I really want a client who leaves outstanding bills behind them with their previous accountant, or do I want somebody who respects their accountant and pays them? And so this again can be very nuanced in that it could be a service issue as a reason why the fees are outstanding. There could be multiple problems behind, but there's two sides to every story, and you've always got to look at the second side, which is, why are the fees outstanding? Is the client responsible here in any way? And so Colin, now I say to the accountant, look, there's fees outstanding, but there's no payment of the fees. And it's black and white on books and records of the client. Books and records of the client, so invoices and client should be returned. What about work product that I've created, Colin? If there's fees outstanding, so I return all the books and records, but do I have to hand over the work that I've done?
Well, it's client information supporting the say like you know, like the standard request would be, look, you know, a trial balance supporting the accounts, lead schedules, control accounts. To me, that's work product of the accountant, but that's fundamental to the books and records of the company. Like you know, that like to me, like that's both.
Yeah, so if you look in an Irish context, it's sections 282 to 285 of what constitutes proper accounting records from a company perspective. Well, if it constitutes proper accounting records from a company perspective under company law, even if you've done the work and produced it, you've done that work in your capacity as an accountant, helping the directors fulfill their duty to produce proper accounting.
Yeah, like you've got a hat on, say, I am at the company accountant, and I think it would also extend to payroll, because that payroll, I know, yes, it's probably done on the firm's payroll package, but that payroll is going to form the basis of the year's set of accounts. So like to me, like a lot of firms will use Excel, okay, to do the workings. They'll use, you know, Sage, they'll use QuickBooks, TAS, whatever way it is, it'll be their version, it'll be their system, because the client is paying for that. So to me, that is like that's fundamental books and records of the company. And also, by extension, fundamental books and records, say for a sole trader or a partnership under the Tax Consolidation Act.
Colin, here's a conversation I'd say I've had 3 times in the last 2 weeks. 3 times in the last 2 weeks, where an accountant has cited to me, oh, well, isn't there this thing where you can place a lien over the books and records if there's unpaid fees? And they've quoted to me, but the institutes talk about that. Now, I think it's the Chartered Institute in Ireland have this in their documents. And this is a very grey area about liens. And like the reality is there is a possibility here. We're not saying there's not a possibility, but the practicalities of saying, no, I'm not handing this over on the basis of a lien because of unpaid fees, it's contrary to the ethical standards. But you have found it in one of the code of ethics.
Yeah, now like it's going like there's a reference in the Chartered Code of Ethics going back a while. So it's an old version of the Code of Ethics. And obviously the point here I'm making here is basically the updated Code of Ethics from the ISBA. It stops. It goes silent. It says, look, you may have a lien, and it stops. But then the older chartered one would have got a bit more detail, saying, look, yeah, there's a possibility of holding a lien over outstanding fees, but The courts have knocked it. Now, I don't know how old this was, but the courts have knocked it out if those are basically books and records of the company or public records that need to be, public access. So I'm assuming that means like share registers and various things like that. And I would also extend that to, like, as what we've been talking about, if this is books and records of the company, say now on the new company, on the new 14 Act, to create the accounts, they are books and records of the company. So it's a
so I think Colin, it's this is referred to in the Code of Ethics. It is historically referred to in some of the individual institute Code of Ethics. The opportunity is there, but the bottom line is that when we dig into this practically, we're saying to accountants, you need to pursue your fees, just hand over the stuff.
Yeah, and like
just hand over the stuff.
I'd be saying I'd be saying, look, yeah, well and good with the book records, get the books and records over to them, get them out of your life. If they're like, obviously the relationship has broken down now, get them out of your life, and comply with the Code of Ethics. So at least you've nothing to worry about from a point of view of a complaint or anything like that. And then what you're doing, like, it's a commercial. It's now commercial. So get a solicitor onto it, or you're going that route now.
Okay, so Colin, this 10 and 10 has gone totally out of control, right? So we're going to wrap this up before past. But what I want to do, so Colin has covered off on the ethical standards, your considerations accepting, and he's talked about professional clearance. He's talked about money laundering. We've talked about outstanding fees. We've talked about the handing over of books and records. I'm going to finish off this session with something very, very practical. Clients are moving, okay? So we're seeing this with our Profit Pro members. We're seeing that they're picking up a lot of clients. There's a lot of movement out there in terms of clients at the moment. So our Profit members are picking them up. That means they're leaving, okay? So we believe there's going to be more movement in the market. And we believe there's going to be much more movement in the market. We also believe that there is going to be losses. You cannot have the economic environment that we have. I'm all for being positive, but we have to be realistic about what's going to happen out there. There's going to be losses. One of the issues is here, unpaid fees and not being paid. I would look at your client list now. I've talked about this traffic light system before. Who are the green ones that are going to get through this? Who are the orange ones that are going to get through it, but they may have some challenges? Who are the red ones that we need to keep under observation? And who are the black? It's a 4-light traffic system. Black ones that we classify as the ones that are dead, they're going to leave. They're clients, they're not going to make it. I'm a huge advocate of progress payments and getting paid as you go, either by doing a fixed price agreement with progress payments or doing a direct debit collection process. You've got to look at your customers. You've got to look at your WIP and your debtors and see who's in there, and you've got to get it out. You've got to get it out. This is something we're doing with our Profit Pro Tribe members, our AGF members. They are doing it. They're converting their WIP. They're putting people on payment plans. And we are already seeing the benefits of doing that over the last 4 months, where businesses now have gone out of business, but at least the accountant has been paid. So watch on transitions, watch what you're getting into, watch all the technicalities that Colin came up with today. And just keep on top of this. Keep on top of this. Keep it under observation. We're running a webinar next week. Colin is going to be joining me. John is going to be joining me. Yvonne, Mike is going to be joining me. We've got a 90-minute webinar on just more of these questions that are coming up and up and up and up. So that's happening next Thursday at 3 o'clock. And if you haven't already registered, the registration link is in the title up above. Register for that webinar. Send the link on to friends, colleagues. It's a free webinar to just join us to look at some of the current issues. So thank you very much for joining us today. Thank you very much to the KnowledgeHUB team for providing the information. And I hope to see you